Hey guys, Jack here from FX Education. So, 30-day free trials, 10 to 15 trades a day and £300 minimum deposits. In this video, we'll be diving deep into broker deals and how much commission your trading guru really makes when you sign up with their partner broker. Broker deals are the same as all commission deals and are introductory offers that educators and signal providers can use to make money when you start trading with them. So how do broker deals actually work? There are typically three types of broker deals that you can find scattered across the internet from large retail brokers. The first type of deal is the most popular that I see being used by gurus, and that is the CPA deal, which stands for cost per acquisition. Having exploited one of these deals in the past to build off my students' free education, while still covering the costs of our website and hosting fees, I know a fair bit about how these deals work, and have been offered some pretty sketchy ones in the past from some pretty sketchy individuals. The deal that I used was with a broker called BD Swiss, and once my students had signed up through my specific tracking link, they would be required to trade one lot size before I would receive a commission from BD Swiss, which at the time was between £240 and £260 per trader. If we look at an example of how many clients some of the largest gurus manage to attract in their groups, it's no wonder that they can be driving around in Lamborghinis without possessing any actual trading knowledge or experience. The largest group I've seen had around 14,000 clients, and if you do the maths based on the lower figure of £240 per client, you get to an astronomical £3.36 million just in commissions alone. This is where there's an extremely fine line between using these deals to cover the cost of providing high quality educational services and simply abusing these deals to profit from selling a dream whilst not actually being able to trade themselves. This, if you haven't already guessed, is a misleading marketing technique that I'm seeing more and more on social media at the moment. Earlier this year, after seeing a massive influx in scammers flocking to Instagram, I decided to personally stop using this type of deal and change the method of entry to my community to a monthly subscription instead for maximum transparency and openness. So that is essentially CPA deals in a nutshell. They ultimately provide a one-off payment when a certain number of trades are placed, and after that there are no further commissions earned directly from that trader. That leads us nicely onto the second type of deal. This is the IB deal, which stands for Introducing Broker Deal. I can't say I've ever had one of these deals myself, and they aren't as commonly abused by commission cowboys, although they are still worth being aware of. The main difference is that the affiliate is paid on an ongoing basis, which is the opposite of the CPA deal, which I mentioned previously. The commission on these deals varies, but is typically around £6 to £12 per lot trade on the account. Now, of course, if you're introducing clients that have £500 to trade with, you're not going to make very much at all, providing they follow the correct risk management, of course. That is why most of these deals are used by educators and signal providers who attract higher net worth individuals who have larger deposits in their trading accounts. This means that because each client is trading with larger capital, they are then able to trade with larger lot sizes, and this could make the affiliate between, say, £36 and £48 a day, if not more. Once they then apply this to a group of, say, 500 to 1,000, it can become pretty clear how some of these affiliates are financing their less than humble lifestyles from methods other than just their own trading. So whilst you shouldn't be too concerned if you come across the first two deals, as typically they are ran through regulated brokers, you do need to be extremely cautious of the next deal, which actually hit the headlines in 2019 when a rogue trader lost millions of his clients' managed capital as part of an unregulated investment scam. This type of deal is the account management deal. This is the dodgiest offering online currently and can sometimes also go by the name of a MAM deal, which stands for multi-account management. These types of deals can also be dressed up as an all-singing, all-dancing trading robot service that will be sold with buzzwords such as artificial intelligence and algorithmic trading, with the promise of riches with no hard work. I mean, who doesn't want their very own R2-D2 making them big guru profits whilst they're kicking back on a beach in Dubai? So, how do these deals actually work? Well, they are pretty simple. Instead of receiving an ongoing commission from spreads, the affiliate is paid a cut of the losses that the clients make. And yes, you heard me correctly, a cut of the losses, not the profits. This basically means that instead of the account management service finding profitable trades, they will just over risk so that you lose money and then they get paid. from my extensive online research relating to these deals, it was clear that a cut of around 40 to 60% of trading losses were given to the affiliate as commission. Now there is one caveat with this type of offering. There are regulated investment management services that will manage your money and invest for you. However, they will likely not approach you on Instagram, and even if they do, just ask for their FCA regulation number. And I'm sure they will run a mile if they aren't legit. If they do give you a number, don't just leave it at that. Do some due diligence and make sure they're actually on the official FCA website, and get in touch with them directly to make sure it's not someone impersonating the company. So, now you know the different types of deals that trading gurus are secretly using to finance their trader lifestyles. Is it the case that you should run if you see a broker affiliate link? Well, absolutely not. You just need to be aware that these deals exist and understand that nothing is ever completely free, even if it's not you directly paying for it. The best thing to do if you find yourself being sent an affiliate link is to ask exactly how the affiliate is being incentivized. If they are open and honest and tell you how much they're paid and the requirements to receive this payment, then you can make your mind up as to whether or not you feel their service is worthwhile for how much they'll be paid. If you're ever unsure on a specific deal, you can always reach out to myself on Instagram, and I can provide a second set of eyes to make sure you're not going to get burned or hung out to dry by someone giving you a dodgy deal. So as always guys, if you liked the video, smash that like button, and if you want to see more content like this uncovering the dark secrets in the trading space, then be sure to leave a comment below and hit that subscribe button. Cheers guys, and I will see you in the next one.